And Mark, just for a starter, what Phil's talking about, that you're not getting deals at the end of this year, what does that mean for 2021 for the auto industry? What kind of year do you see setting up?
Well, I think for 2021, you're going to see an industry that's going to be up probably in the neighborhood of about 10 to 12% versus this year. And I think there are a couple of things that are driving that. First, Becky, as you know, retail sales have snapped back pretty well. But what has kind of dragged down the industry this year, particularly since COVID, is fleet sales. They basically turned off. But what you're seeing in the last month or two is fleet sales starting to come back. And in any given month, fleet sales, particularly for the big three, the Detroit three, represent around 25 to 30% of the sales. So as fleets come back, that will help 2021. But when you look at the factors that are positives for next year, I think first you're seeing low interest rates, which help people finance cars. You're seeing strong housing starts, which is very correlated with the strength of the pickup market. Obviously, with the vaccine coming online, you're going to see less impact from COVID to the economy, the government stimulus monies that have just been put in place. And I think, as was mentioned, you're going to see, in my view, some of these lingering changed buying behaviors that were brought on by COVID in the fact that, people aren't going to want to, particularly families, aren't going to want to share cars or share ride sharing as much as they have in the past. So they're going to want to buy a car to keep their family safe, and that's good for SUV sales. So I think it's setting up for a good 2021. The negatives for next year are basically inventory. The biggest challenge for manufacturers is getting production out, and that's mainly due to high levels of absenteeism in the plants, both at the automakers and the suppliers due to COVID. So that's what's keeping the inventory pretty short, and I think you'll see that for at least the first half of next year.
Hey, Mark, very quickly, you mentioned that fleet sales are such a huge part of the big three, 25 to 30% of sales. I didn't realize that. I could imagine some fleet sales coming back for companies in other places, but a big part of the fleet sales has to be municipalities, governments, police departments that are traditionally out there buying in fleets. And that seems like it could be a bit of a stretch to see some of those local districts or states putting a lot of money towards things like this, particularly when that didn't get passed in the stimulus bill. They're going to have to look at ways to cut costs.
Yeah, that's a piece of it. But keep in mind, when you look at fleet sales, there's three elements. There's the government fleet sales that you mentioned. There's commercial fleet sales for private businesses, which is coming back. And then there's rent-a-cars, the Hertzes and the Avises of the world. And they have defleeted or reduced their inventories tremendously over this year. And as you see, as Phil was just speaking, as travel starts to come back next year, you're going to see those rent-a-car companies start to buy again. So, yes, government will continue to be challenged, but I do believe both commercial private fleets and the rent-a-car companies are going to start coming back.
Shepard Smith here. Thanks for watching CNBC on YouTube.